Welcome back. Now, JK Paper recently reported the Q2 numbers and things were a bit under pressure for them. Net profits declined 58%, EBITDA contracted 35%, margins came under pressure and the top line growth was just 2%. AS Mehta, President and Director at JK Paper, now joins us on the show. Mr. Mehta, we've been talking about, moderating demand, how top-line growth for the company has not been there even last year and even so far in FY25, in the first half of the year, we haven't seen too much by way of growth. What is the outlook looking for the second half of the year in terms of volumes, in terms of realizations, and what it does to your, margins?
See, in fact, there is a pressure on profitability. You are absolutely right, and this I commented in the previous quarter as well, because such a high or inflated raw material cost has impacted the profitability of the company. And I mean, such a raw material scenario we have not seen in last almost 7-8 years, which has now happened. In fact, this is the outcome of no plantation, or rather very minor plantation during the COVID period, which has now started impacting. And in fact, it was known to us. So this is one. The second, as far as the demand is concerned, I would say demand, there is no major issue of the demand. In fact, the industry is seeing a demand. Packaging board, it was very good demand in Q2. Writing, printing, the copier was all right. And the map litho, in any case, this quarter remains all the time a slow quarter, because the commercial printing and the publication, they start only after October or November for the new session. So I wouldn't say that the demand is a major issue at this point of time. But certainly, the cheaper import has started coming in India, and that has started creating some kind of a sentiments in the market where the customer and the channel partner, they are very cautious in buying. In fact, they are liquidating their inventory. So that is one factor which we need to keep in mind.
So, Mr. Mehta, give us two numbers. One, how much lower are the import prices versus the domestic prices right now? And, you spoke about wood cost, which continues to remain high. Is this something which is expected in the second half as well? If that happens, what kind of growth levels in terms of volumes are you looking at in FY25? Will it be lower than FY24?
See, if we talk about the volume, I would say that the volume is going to be more than what we have seen in 23, 24. So the volume-wise, it would be higher.
How much higher, sir?
I would say that it should be somewhere around 6 to 7% higher. Okay. It should be higher because the industry is growing at a fairly good rate of weighted average 7 to 8%. So in fact, we should have the same kind of a growth number. Only thing is that the writing, printing, we are more or less operating at 100%. So the packaging board should give us a growth. And overall, I would say that volume-wise, it should be 6 to 7% growth. But the NSR is lower than the last year. So I won't say that the same volume growth we will see in the top line in the rupee term. This is one scenario. Your question on the price parity of import as well as the local prices, I would say that like the packaging board right now, price difference would be close to 10-12%.
Sorry, could you repeat? 10-12% is how much cheaper the imports are?
Packaging board, the virgin packaging board, I would say that the prices of imported may be lower by 10 to 12%. So that has started impacting. In fact, at a current our pricing level, it is lower at 10-12%. But if I compare a sustainable pricing of packaging board, it should be somewhere around 7-8% higher from a current level in the domestic market. So at that level, the import and domestic price difference would move from 15 to 20%.
So, sir, how does the industry combat and go through this? Because this is now, more than 2 years of challenging, times. I was looking at your margin profile. In FY23, your margins were 31%. FY24, they came down to 24%. In the first half of the year, it's down to 16% at the EBITDA level. There is the threat of increasing imports, as you called out. They're cheaper. Wood prices continue to remain elevated, and there is also demand for wood from the plywood industry. So you're also competing on that limited supply for your raw material, which is wood. So what is the company doing to get out of this funk?
All right. See, the 2-3 things when we talk about the wood, in fact, we have been requesting plywood and MDF people to also do plantation, but sorry to say that they don't do much on the plantation part. Whatever plantation we do, and they take material out of our own area. So we have to accept this scenario that we need to continue our focus on plantation and more plantation. So in fact, this is what we have done. Our current year plantation is going to be much more. Last year we did close to 60,000 of acre of plantation, or more than that, 61 to be very precise. And this year we are going to do something around 65,000 acre of plantation. So, and in fact, our need is not more than 40,000 acre of plantation, but we are doing. And in fact, what we have discussed in the paper industry, let's do plantation for plywood and MDF people as well, so that collectively in India, we don't face that scenario. And hopefully in next 12 to 15 months time, I'm pretty confident that the wood scenario will be far more comfortable because the wood availability would improve drastically in the year 26-27. So that is one area. And in fact, we will have to live with this wood scenario for next 9 to 12 months time, because the cycle correction, it takes minimum 3 years time.
Okay,
This is on the raw material front. The demand, as I said, that the paper market, India is the fastest growing paper market. So our growth should remain at 6 to 7%, which is a fairly healthy growth. Only thing is on the price front. See, we have been talking to the government on this issue of the very, very uncompetitive dumping by the Indonesian player, and China. The dumping is not that issue, is not a major issue. Yes, there is a dumping from China as well, but since there is a 10% duty against China, so at least there is some protection from China. But Indonesia, being a part of the ASEAN country, there is no duty. And in fact, the import is coming from Indonesia at a very, very low price. So in fact, we have already gone for an anti-dumping against the China and Chile right now, and we will be moving against Indonesia also, so that the domestic industry is protected from those the cheaper imports.
Okay. All right. Thank you so much, Mr. Mehta. Would have liked to chat a little bit more, but completely out of time. But thank you so much for putting that spotlight on what's happening with the industry as well, and the company specifically. Let's move on now. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.